This is Matt Dalglish with the Mercado Cattle Trading Opportunities provided to you by Stockco. So far this season, the cattle market's been under the pressure of a fairly dry start, and we've seen some elevated slaughter coming across both the northern and southern markets. The background to this elevated slaughter has been the beginning of the year. We saw the Queensland monsoonal season probably a bit muted compared to previous seasons, so we did get some rains to the very far north, but into the central Queensland and western Queensland district a little bit lower than normal, so that was a much weaker monsoonal pattern there. And certainly in the last few months down towards the south, there's been a fairly dry spell, particularly in New South Wales, but across that southeastern seaboard. So we're really just waiting now for the beginnings of the autumn break, and it's been a bit delayed so far this season, so we've seen cattle prices starting to slide. Turning to the restocker activity, that dry conditions has seen the restocker levels dissipate somewhat, and obviously that's flowed through to the price of young cattle. Certainly, whenever we have seen patches of rain appearing both in the north and the south through the last quarter of the year, we did see restocker interest increase. So there is still a capacity for restockers to get back engaged in the market, but it's very dependent upon the rain, and everyone at the moment, certainly in the south, is looking to the skies for when they can get involved in a greater degree. In saying that, we have seen young cattle prices slide over the last few months, and indeed the Eastern Young Cattle Indicator dipped below 500 cents for the first time in about 3 years just last week. So that's indicative of that reduced restocker activity. Looking at the feedlots, we have seen some improving margins for feeders over the last few months. That's partially due to the fact that some of the finished prices of cattle have held their ground compared to the younger cattle, increasing the available margin to feeders, and that's providing some underlying support to the price of feeder steers going into the feedlot. Something to be concerned by, though, looking forward, is the recent trade developments with regard to China and the US and the impact that's had on sorghum prices. So we've seen sorghum prices lift quite a bit significantly since the start of the year. And that's something to keep an eye on, because if those sorghum prices continue to go up, and particularly if the Chinese demand starts to really ramp up because they're looking for alternative feed for China, that could underpin prices locally in Australia and make it a bit difficult in the coming months for feedlots. So something to keep an eye on. With regard to where we sit with the herd rebuild, we're still in the herd rebuild phase. The female slaughter levels have been a bit higher. The ratio of female slaughters to total slaughter has been a bit higher compared to previous season, but it's still, if you look at it from the broader perspective, it's still within the herd rebuild phase. So it's just reflective again of that drier season, seeing some producers turn off females at a higher proportion at the moment. Overall, the herd numbers are still fairly low and coming off a low base, so supply has been tight. And it continues to be tight this season, so we are still kind of seeing that the prices for finished cattle are holding their ground relatively well because of that tightness of supply. Turning to offshore markets, the 9SEL has had a fairly stable time in the first 2 months of the year, pretty much for the first 2 months sitting at about the 600 cent level. In recent weeks, we've dropped down to the 550 cent level in Australian dollar terms. And that's been exacerbated. That drop down's been exacerbated by some concerns in the US over a period of high production into the mid part of the year, and that's really based off the fact that the lot feeders in the US have got some big numbers coming through around that kind of June timeframe, and so that's put some pressure on the 9SEL. However, on the counter side to that, we are heading into the grilling season in the US, and generally speaking, seasonally, you tend to see the 9SEL increase over that time. So you could suspect now that 9SEL could hold some ground here and start to creep up in the coming months, which will again provide some support to young cattle prices in Australia. Turning to a cattle trade scenario, it's very much a rainfall dependent event. With those younger cattle prices drifting lower most recently, and the finished cattle staying reasonably firm comparatively, it has opened up an opportunity for trading, both for grass-fed in particular trades, both 3 months right out to the 12-month period. So there is some money to be made at the moment on current prices if you're buying weaners and carrying them through either to feeder steers or carrying them right the way through to finished cattle. Certainly on the Mercado website, we do put out regular updates on potential trading margins. And just last week, we put one out showing that there was some money to be made, providing you've got pasture. And certainly there have been a few restockers sniffing around markets in the last week or so, particularly in the New South Wales region around Carcoar, looking to buy weaners with a view to fattening them out. And the reason why they're in there is because they are betting on this autumn rains to come. So at the moment we're really just focusing within the south on the skies and looking for that rainfall. And that's pretty much the update for the Mercado wrap for Stockco.